We are speaking to KVS Manyan, the Group Head of Consumer Banking for Kotak Mahindra Bank in India. Thank you very much for speaking to us.
Thank you. Pleasure being here.
Tell us a little bit about Kotak Mahindra in the Indian context, in the competition on the financial institutions base in India. How big is it? When was it set up? What kind of competition it provides in a marketplace that's dominated by much bigger institutions?
As a group, of course, we are a 25-year-old group. Lots of people in India must have seen the campaign that's going on, it's great to be 25. So as a group, we are 25 years old. The bank is about 7 years old now. It was kind of a reverse process for us. As an institution, we were into most financial services, like investment banking, the car finance business, retail financing business, loans business. We were into securities broking business, and finally we became an insurance company and also then a bank finally. So the progression usually is the reverse. We followed a progression which we became bank the last, and the bank is the holding company of the group. So from being a kind of a product focused organization in multiple areas, over a period of last 25 years, we've become a kind of a financial conglomerate, which and the bank is leading the customer acquisition of the group and has become the customer-centric platform now. And historically, we have been far more focused on the capital market side as well as the retail side of the business, retail financing side of the business. After the bank has come in, we have also added the retail liability franchise to that in a significant way. And we believe that in the mass affluent side of the market, which is far more focused on the capital markets, investments, and looking at slightly evolved kind of servicing, I think we add significant value in the market, and we have a fair share of the market there by virtue of our brand name being quite established in that segment of the market.
You have grown your distribution base very aggressively. Yeah. Now, this was during a time when India itself was growing very strongly in the last 7 years or so. What is the strategy that you deploy in terms of building your branch network, for example, very quickly? And what are the numbers that you've been looking at to make sure that it's a sustainable growth?
Yeah, right now we are close to 300, actually we have 303 branches today. We are looking in the short term by December 12 to reach about 500 branches. And we believe that, of course, branch growth, we have also, while we have grown it reasonably fast, we have also believed in reasonably measured kind of an expansion to make sure that the productivity of the channel, because it is a high cost channel, so productivity of the channel is good, and making sure that it is synchronized with the rest of the consumer bank strategy has been also important. So we are looking at a number of about 500 by December 2012. That is the short term target. In the long run, we will need to evaluate, but I believe that given our current strategy and current focus markets, target markets, and the regulatory issues involved with the network, a network of anywhere between 750 to 1000 seems fairly appropriate in the medium term. So I would say short term 500, medium term 750 to 1000 is the way we look at the network.
Yeah. In terms of staff strength, how many new people have you added?
Currently, our consumer bank would be about 9,000 people strong. We see this growing by about 30% every year. So roughly about 30% every year. And given the fact that you have to also recruit for some level of attrition, our recruitments would be close to about 400 people a month. So technology team will be about 50 people. Largely otherwise outsourced. Back office will be about 400 people. Again, we outsource a lot on the back office side as well.
And the contribution of retail to the overall bank's business?
Retail balance sheet, we look at the balance sheet in three parts, what we call the corporate bank, the commercial bank, and the retail bank. The retail bank would contribute about 40% of the balance sheet. Commercial bank, which is also semi-retail actually, smaller corporates, vehicle finance, commercial vehicle financing business, agri lending business, those are called commercial. Commercial and retail together will contribute about 2/3 of the balance sheet. Corporate will be about 1/3 of the balance sheet.
In a fast-growing country like India, what would you characterize as your top 3 biggest challenges?
It's quite important. It's like in India, the markets are growing, and obviously it's like with the rising water, everything rises, and there is a momentum growth that is available to you, because there is just sheer expansion will give you some kind of some share in the momentum growth that the economy gives you. Yeah. So that's the easy part, in my view. That's the easier part. I think the more difficult part is how can we make sure that while we scale up, it is done productively. It is done with you build getting market share and getting ROEs is different from building a franchise over a long term. So I think the key things I look at is how do you build a franchise in terms of a consumer banking franchise, an employment franchise in the sense the kind of people you attract. I think these two are extremely critical. And the third I would say is how can you make sure that while you run with the momentum, how can you continue to focus on making sure that you are growing that productively, because organizations have a bad habit of institutionalizing bad habits as well, and it's very difficult later to turn that around and say that let me grow now, I will optimize later, is something that I don't believe in. I think the two have to run in parallel. So I would say three critical things, like you asked me three things. One, how to build a franchise, not only the current profit and loss account. Second, how to build a franchise for employment to attract the best people. And third, optimal growth along with growth, fast growth.
Where does risk come in? Because it appears that you are much more focused on the fee base, on the liability side of the business. Are you a risk adverse bank?
No, not really. Actually, if you look at our asset franchises, we have a presence in almost all the retail products. Whether it is car, in the consumer side, we are present in car, cards, personal loans, unsecured loans, mortgages, all of that. And if you look at we are a conservative bank in that sense. We believe that the biggest downsides for institutions, the franchises get built primarily on the liability side, but the biggest downsides can come on the asset side with the bad loan losses. So you have to balance the two, and we have always been extremely careful about balancing the downside, unlimited downside losses that you can incur on the asset side, the loan side. And we have always managed that conservatively, but I think we have managed them fairly well. We have fair standing in the market on some of those products, and yet we have been able to manage those risks fairly well.
And the goals that you've set for yourself for 2011?
This year, I told you about the network expansion side. I think we are increasingly thinking about, there is this thought while we were discussing in the morning today, there is a phase of what you said is a product, and then sales, and then relationship. I personally don't believe that this is a cycle that you have to go through from this end to the other end. I think it is possible. I think given the fact that we are far more focused on the mass affluent segment, we believe that relationships side of the business needs to be built. You don't have to wait to mature on the market share side necessarily to build the relationship side of the business. So we are increasingly investing a lot. We are as a bank, we have a customer single view. We have invested a lot on CRM systems. We have invested a lot on quality initiatives that we are taking. So I believe that some of the biggest initiatives we'll take will be in terms of building the relationship side and the selling process. How can you make selling processes far more robust? Analytics side, which will give us far more ability to sell more efficiently than just spray customers with offers and hope that they buy them. So those are the kind of initiatives while of course we will continue to grow, I think those are the things that actually keep me awake. I think growing the network from 300 to 500 is the easier part of the challenge.
It's easy to say that you want to make sure that your growth is sustainable, and you want to work the customer relationship part
at the same time. Yeah.
At the same time, but when in a fast-growing market, your
it's
staff
it's
not even interested. What's wrong with you? Your numbers are coming in. Why do you need to?
Yeah, I know it's a big challenge. I know balancing these two is important. But I think as a culture, I think if you build a culture for and luckily for us as an organization, we have built a culture which thinks like that, and I think we will be able to do that. I am fairly confident we will be able to balance the two. Yes, there is a balance, but it can be struck.
Thank you very much for spending time with us.
Thanks a lot.